This is Robert Chadwick with American Mortgages. Thank you for joining another one of our webinars. This webinar is actually quite exciting because it's the first time that we've ever brought a developer directly to our clients. The purpose of this is a lot of times we pre-approve our clients and they still haven't found a property or they're not sure which property to buy. And we're hoping by being able to feature Lillian Homes, which is a development just outside of Dallas, Texas, that will be able to show you viable options with great returns and properties that are very, very rentable, which is, you know, as a business model, that's our main focus. So with that, what we will do during this webinar is I will introduce Phil Garrethy. Phil is representing Lillian Homes today, and he will cover the properties that are available and currently ready to be purchased. He'll also discuss his property management division, very similar to ours, where we only focus on foreign nationals and expats for mortgage financing. They do the same when it comes to property management. So very professional. What we want to offer is U.S. properties that are basically turnkey. Once the property is developed and finished, you would have the mortgage financing in place, but not required for a purchase. And you would also have the option to use the property management. So with that, I will just start the basic facts about the area and Texas in general. So as likely everybody knows that is investing in U.S. real estate currently, there is a major housing shortage. If you are to look at what the National Association of Realtors is stating, is currently there is more than a $7.5 million shortage of homes. Now, mixed with the current rise in interest rates, which forces a lot of the marginal buyers out of able to buy a property and to only be able to rent a property, this is actually a very, this is almost a perfect storm for this type of investment. And if you're familiar with the housing market stability, one of the things that, especially in these types of communities that are so close to major cities, we really feel, and from all the data that we've been able to compile, that we are not going to see any type of price correction. If anything, we'll probably see a price increase for these markets. If you're familiar with Texas, it is a very pro-business state. What that means is there is a lot of businesses that are moving from states such as California or New York into the Texas area, meaning there are more and more people or potential renters that will be looking for these properties. And I think one of the key data points that probably a lot of people forget is Texas is a very landlord-friendly state. And I think Phil will touch on something about this, but it's very important where you purchase your property. You know, again, because we only focus on U.S. properties for foreign nationals and expats, one of the things that we try to express to our clients if they ask us for any real estate advice is going for a landlord-friendly state. And Texas is probably one of the most landlord-friendly states, meaning in the event that they don't pay rent or whatever it may be, the eviction process is very straightforward. So with that said, I will introduce Phil. Phil, thank you for joining us. Again, Phil is representing Lillian Homes. Phil is coming to us from Australia at this point, but he has been working with this development for quite some time, has a lot to talk about, not only from Lillian Homes, but on these particular properties as well. So Phil, thank you again. Take it away. The stage is yours.
Thank you, Robert. Well, yes, as Robert was saying in his introduction, Texas is certainly the state, and in our experience, which has been over the last 14 years, is the state to purchase real estate in from viewpoint of pro-business, pro-owner, and growth potential and return on investment. Let me introduce you to the builder, of which I'm representing today and have been working with Lillian Homes now for some years. The company was founded in 2007, so it's over 15 years old. It is now one of the largest building groups in the state of Texas. It's a family-owned business, so the focus tends to be more so on the client as opposed to a shareholder, as opposed to the larger corporations. So Lillian Homes, we decided after many months of due diligence to become a major promoter of their product. And I'm proud to be a part of the Lillian Homes group. To date, Lillian has built over 18 communities throughout the Dallas-Fort Worth area. They were the first home builder in Texas to use the smart home system, which involves smart technology. And Gravity Homes, which is actually the product that we're going to be talking about today, is a subsidiary of the Lillian Custom Homes group. So the Gravity Homes is potentially the type of home that is ideal as an investment property. So this video that we're actually looking at now, this video is actually a reflection of the community that we're talking about today, which is the Crowley community, or the city of Crowley, or 𝐉𝐨𝐬𝐧, which is the community. As you can see from the internal video, the quality of these homes is absolutely excellent. In the kitchen, for example, if you can see the countertops, they are all made of granite, first-class appliances. The homes are beautifully finished, and this is a rental property, but the quality is outstanding. And this is one of the reasons why, or many of the reasons, but this is one of the reasons why my company and certainly my colleagues decided to become great advocates of the Lillian product. This particular home is 4 bedrooms, 2.5 bathrooms. All homes have a double garage. Lot size is usually around 600 to 700 square meters of land. Often you'll find they'll have a study. This is the study we're looking at the moment. There we go. You'll see the lot sizes are quite large. Each home has a garden at the front and the back. Some homes, as you can see, have swimming pools. But this is the style of the community. It's absolutely gorgeous. Ideal for renting. People love to live in this particular area because of its locality, and I'll move on to that shortly. So here we have the community, which is actually called 𝐉𝐸𝐺 South, which is close to Fort Worth, the city of Fort Worth, which is, so now we're looking at photographs of Fort Worth. So there you can see from that diagram that we selected Crowley as the community for a number of reasons, but the primary reason is its position in between Fort Worth and Dallas. Fort Worth is actually the fastest growing part of the Dallas Metroplex area. And the reason for that is that there is significant immigration into the Fort Worth area from large corporations. Texas, of course, is a no tax state, I'm sorry. So as a result of that, numerous corporations are moving into Texas, and particularly in the Fort Worth area. So Crowley is ideally situated in that area. So it's 15 minutes from downtown Fort Worth and 40 minutes to downtown Dallas. But the majority of our tenants will be coming from the Fort Worth area. This shows you what the population and median household income is. Population growth in Crowley has consistently over recent years been approximately 2.74%. Household income in Crowley is significantly higher than the US average at $76,677, which is significantly above that of the US mean average. Families at around $77,814. And as you can see, Crowley is, but it's certainly the area to be, and that was the reason we decided upon this particular city. One of the things tenants look for when they are deciding on a particular property to lease, of course, is medical, shopping, and schools. Medical is very important. So Crowley has one of the largest medical system hospitals located within its facility. Now, this is part of a national hospital chain, if you like, but this particular hospital chain employs something over 56,000 people within its group and spend over $73 million in expansion. This hospital is 13 minutes from our Crowley project and very important for tenants. tenants. Education is vital for people that are deciding on where they're going to rent. And obviously, from their children's viewpoint, what's the locality and the quality of the schools? Ideally, the elementary school, which is actually brand new, is located 5 minutes walking from our community at 𝐉𝐨𝐬𝐧. So you can literally walk out the back door and across the road and you're at the elementary school. Kids can walk to the high school, which is 10 minutes away. 15 minutes drive to all shopping malls and supermarkets. As I said earlier, 15-minute drive to the major hospital. And then, of course, only a 15-minute drive to all company headquarters in downtown Fort Worth, which is absolutely ideal for tenants, remembering that the bulk of these people will be working for these corporations in and around the Fort Worth area. And if you're into sport, well, there's golf courses within 20 minutes of driving, and there are multiple city parks spread throughout the community. Again, education is vital, and if you look at this screen, you will see some major university and colleges within 15 to 90 minutes drive from the Crowley project. Some of those are some of the best schools and colleges in the state of Texas. This screen gives you an idea of what the potential rental in homes in this particular community or the city of Crowley, I'm sorry. So the average price per square foot is $1.30. That is, the average price rent is $1.30 per square foot. So we estimate for the average home within this community, the rental income will be around about between $2,500 and $3,100 per month. And we base these numbers on statistical current data, and from those numbers, we're able to accurately calculate your projected return on investment. Again, so this screen is essentially showing the Fortune 500 companies that's surrounding Crowley as the city of Crowley. So you can see from right down the very bottom on the left, you have the Dallas-Fort Worth area, Arlington. Across to the right, Dallas-Fort Worth. And if you look at that screen, you can see a number of the major employers that are based in these particular areas, particularly in the Fort Worth area. So this is ideally situated from an investor's viewpoint and tenant's viewpoint. So this plan we have here is the Stanley. This is an example of one of our homes. Purchase price on this property is $440,000. Rental income is in excess of $3,300. The fixed expenses are $1,053. The expected return on investment on this particular property, and this is 4 bedrooms, 2.5 bathrooms, 2,573 square feet in size. Your expected return on investment is approximately 5% per annum after your fixed expenses. So here's a plan of the Stanley. The predominance of the Gravity homes is the open plan style living. So if you look at the large slide, you will see that predominantly it's an open plan approach. The kitchen, breakfast area, and they call it the great room, which is essentially a large family and dining area. Usually the master bedroom is towards the front of the house. In this particular case, the master bedroom, or the main bedroom, as it probably would be called in this case, is at the back of the home. So that gives us quietness. All have ensuite bathrooms, of course, walk-in closets, double garage. To the front of this home, it has a study, which could actually become a fifth bedroom if that was what was required. And then, of course, you can see from this one, and this is actually a double-story home, you'll see it has a game room upstairs and then 3 bedrooms upstairs. The main master bedroom is popular for a downstairs environment. This gives you an idea of the outside of that home. All the homes are brick and stone. Now, this is an example, again, of the interior. This is a house without carpet. So this is timber flooring, open plan style living, beautifully finished. 1 story. This is stone countertops, as you can see, but still an open plan style. Large bedrooms, beautiful bathrooms. This is the size of the lots that you can see. This is the Olivia plan. This is slightly smaller. This is 3 bedrooms, 2.5 bathrooms. They all have 2-car garage, of course, 2,007 square feet. The purchase price on this, of course, is lower, at $400,000, reflecting the smaller square footage. The net income is in excess of $1,500 per month. Again, the return on investment on this property is approximately 5% per annum. Now, that's excluding capital growth. I must say say that when I'm talking about return on investment, I'm only talking about return on rental income. I'm not talking about capital growth, which in our view will be in excess of 10% year on year, 23 through to 24. Again, this is the Olivia floor plan. This is open floor plan, as you can see. The living and dining area is at the back of the home. In this case, main bedroom is also toward the back of the home, but they all have ensuite bathrooms, walk-in closets, very large living area. All bedrooms are large and double garage. This is an example. This is Royce City, but again, this is the interior of the Stanley, a beautiful interior home. Quality fittings throughout the homes. The home you're looking at there is the model home, but that's one of the plans that we have available in the Crowley community. This is the Emory plan. Again, this is an entry-level home, $390,000, reflecting the square feet, which is 1,803 square feet, 3 bedrooms, 2 bathrooms. These are usually quite easy to lease. People who might only have 1 or 2 children, they're happy with 3 bedrooms. Again, as I said, the purchase price at $390,000. But again, the average return on investment for this property is again around 5% net on rental income, excluding capital growth. This is the floor plan of the Emory. Again, this is very open living. Main bedroom toward the back of the house, middle of the home, bedrooms 1 and 2, ensuite bathroom again, walk-in closets, but very large living areas. You can see kitchen, a breakfast area, guest storeroom or dining area. And a study. This place has a study, which again, if you wanted to, you could add as an additional bedroom. It doesn't have a built-in closet, but again, it could be used as a bedroom if required. Let me talk about Ausplan Management, which is my company that work hand in glove with Lillian Custom Homes. Ausplan Management now has been in existence for 14 years. And one of the unique features of dealing with Ausplan Management and Lillian Homes is that it's a seamless turnkey relationship. That is that you would select your home, we would facilitate the purchase on your behalf, complete the closing, arrange all legal aspects of the purchase. The closing would be completed in assistance with our colleagues. The home then would be placed onto the market for a tenant. So as you can see, the process is a before close. We analyse the market, ensure that we are getting the type of tenant that we're looking for at the level of income we want. We analyse the client, we sign the lease agreement, conduct the detailed walkthrough to ensure that both the tenant and the owner understand at the very beginning. And then after the close, we list the property. We provide all financial support that's necessary along the way. We manage the home along the way in totality. So it's a complete turnkey operation as far as you're concerned. This is what we call our service content. Rental services, as you can see, free walkthrough, rental market analysis. We support the HOA approved documentation and prepare the rental agreement. We maintain the property for you. We make sure that the house is regularly inspected. Any work needs to be done from time to time, remembering that warranty, of course, applies to the home for up to 10 years. However, there may be some work required, which we oversee and arrange. Emergency repairs may be required. We look after that for you. And we audit that repair process. The financial services that I'm talking about, of course, is in terms of receipt of your escrow deposit. We collect the rent. We provide monthly profit and loss reports, which are emailed to you, and the net income that you receive each month is deposited to your nominated bank account. And then value-added services. It's a balanced relationship between the tenant and, of course, you, the owner. We represent you, the owner, at the HOA meetings. We arrange your insurance on the home, regular real estate market reports for you to make sure that you are aware of what and how your home is appreciating in value. And the nice thing about Ausplan Management, we have representatives in both the United States, Southeast Asia, China, and Australia. So you can talk to anybody at any time of the day, either by telephone or by email. So there's no time difference problem, which often plagues other management groups. And we represent the owner in the event of any disputes, but that doesn't happen very often. So this is a summary of our competitive advantage. More than 30 years real estate investment experience. We have more than 15 years property management experience. And one of our most important things, as I said, is the turnkey. And there are no costs for the services that we provide, other than our management fee, of course.
Thank you, Phil. That was super interesting. If anybody has any questions regarding the property or the property management, we will address them at the end. If anybody would like to see the videos or get more information on the properties, not only can we discuss at the end of the webinar, but we'll also be mailing them out. So for my portion, as normal, I will just go and do a short summary of what is available if you choose to finance one of these fantastic properties. So a general overview of our U.S. mortgages: no U.S. credit is required. We can use credit from your home country. If you don't have credit, that certainly is available as well. All of our loans are dry lending, which means there's no AUM required. There's no requirement to open up a bank account with the ultimate funder of the loan. And of course, because 100% of our clients are living and working abroad, but obtaining U.S. mortgages, foreign income is allowed. Fantastic. We have loan programs in all 50 states. If you're a foreign national, we can get up to 75% financing on a purchase. If you already own property, you can get 70% if you want to release equity, pull cash out. If you are an expat, assuming that you still maintain credit, we can get up to 80% financing. If you've been an expat for many, many years and you no longer maintain credit, that's absolutely not a problem. We can get your loan done as a foreign national as well. So there's no issues with that. Normally, turn in all your documents, which is a very limited number of documents that are required. We can get your loan approved within 72 hours. Once we issue your loan approval, we issue you a loan approval letter. And once you have that letter, you can purchase a property. Our average closing time, and it really just depends on where you would like to sign your documents, is anywhere from 30 to 45 days. And of course, there is no need to travel to the US. You can close your documents in almost any major country and in a variety of ways, not just going to the embassy. In general, we do purchase, refinance, equity release. One thing that's quite unique about the US is there are no age requirements for the tenure of the loan, meaning if you're 19 or 99, you still qualify for a 30-year mortgage. Very, very unique for the US mortgage market. We have a lot of fixed programs. So whether it's 30-year fixed or something that's quite popular now as interest rates are a little bit higher is a 10-year interest-only loan, which means the rate is fixed for a 10-year period. You're only servicing the interest, so the payments are much more affordable. After that 10-year period, loan converts into a 30-year fixed principal and interest. The perfect thing is there's absolutely no adjustment in rate. So you're going to know what that rate is over that long period of time. We have loan programs that make sense. So we'll cover this in another slide, but we have loan programs that go only off of the rental income of the property, meaning that you don't have to provide any personal income documents. And I think one of the things that we're most proud of is 97% of the loan applications that we submit actually get approved. So because we have such a variety of loan programs and we are experts at foreign nationals and expats, we know exactly what is required to get your loan approved. And much like Phil and Osplan with their company, we have 24/7, 30 loan officers in 12 different countries, speak a variety of language in your time zone. So while you're applying for your mortgage, you are working in a time zone and with somebody that understands you, and if it requires, understands your language. So American Mortgage's loan programs, I'll go through these quickly. We have the American Mortgage Express. This is what I was talking about, where no personal income is required. There's a following slide that kind of shows what exactly this does mean. Again, no AUM is required. You do not need to fund an account in order to get a U.S. mortgage. no U.S. credit. These loan amounts go as low as $150,000 and up to $3 million, meaning that with up to 75% financing and these very affordable homes, almost anybody can afford to start their U.S. portfolio. So this is a loan program that does not require tax returns, but because we're doing loans from clients that are in Sydney to Shanghai to Seoul to Sweden, wherever it may be, if we had to go through very complicated tax returns and multiple languages and jurisdictions, it would be a nightmare. So instead of providing your tax returns, if you're employed, we want a letter from your employer. If you're self-employed, it's from your accountant, and we actually have a template that we'll send you. We need them to list 2 years of income and current year to date. That is sufficient enough as in lieu of providing your tax returns. And again, up to 75% financing for foreign nationals and 80% for expats. Now, the AM investor loan that I was talking about, which is common sense underwriting, is very similar to how commercial mortgages are underwritten, meaning that if the gross rental income is more than what or equal to what the mortgage payments are, and when I say mortgage payments, I mean the principal, the taxes, and insurance, so everything that's required for that mortgage payment, if it balances, the rental income is more, the loan qualifies. Now, it doesn't mean that you have to qualify for up to 75% financing, but it means if that ratio works out, can qualify for up to 75% financing. Absolutely fantastic program, super easy to qualify for, and still great rates. So Phil, I think, these are the current properties that are still available. I do believe that if, we were talking earlier that a couple have been sold since we talked. However, if there is anybody that is particularly interested, this will be up and available based on the location, whether it's a cul-de-sac, a view of the park, or whatever it may be. That should be something that you can choose from.
What I was going to say was that the seminars that we recently conducted were very successful in Southeast Asia and in Dubai. Some of those lots may not be available, but if you selected a lot that you like, I can tell you within 24 hours, well, not even that relatively short period of time, if that lot is still available. So you would need to select one reasonably quickly before the balance of those have gone. So all of the ones in green are currently still available. Some may have sold, but I can give you an update on that.
And kind of to add on what you said, so last month, America Mortgages, along with Lillian Homes and Ostplan, did a roadshow, and we went from Singapore to Manila to Hong Kong to Dubai, featuring these properties, and it absolutely was fantastic. I believe I may not have the exact numbers correct because not everybody took a mortgage, but a lot of people did. But I believe we sold 13 properties or 17 properties over that period of time. So absolutely fantastic turnout. So I think what is quite appealing, Phil, and maybe you can kind of add more into this, but Lillian Homes is offering a special promotion. If you're, and I mean, we have this for today because this was actually the same slides that we used for the in-person seminars. But if you reach out to Phil and you are interested in buying one of these properties, they're giving a $6,000 discount off of the purchase price. And Phil is actually offering a 10% discount on management fees. I don't know if you want to touch on that a little more, Phil, but I think this is absolutely just fabulous.
Yeah, that's really important, Robert. And thanks for bringing this point up. We were able to, particularly for recent a series of seminars, offered that $6,000 reduction on price. That was extremely popular. We've now agreed to extend that to those that are interested in purchasing a property via the webinar. And the 10%, our management fee is 8% on the gross rental income. However, on all those folks that are interested in buying through the webinar, we are also happy to discount that fee by 10%.
I have to point something out too, because we've been doing this for a long time, and I've been in real estate myself for many, many years, property investor, etc. And I think the 8% 8% management fees that you charge is on the low side. I mean, I have property myself and I'm paying a percent management fee. So if you're getting the 8% management fee plus a 10% discount, absolutely fantastic on this.
That's a very good point. I mean, it's interesting if you do an analysis of property managers in the United States, it would range between 7 to 10%, depending on the state that you're in. In Texas, we see the average is above 8%. We chose to manage our properties at 8%, but the 8%, the services that you receive for that management fee is significantly in excess of our competitors, and we're very proud of that.
That's fantastic. So if anybody, we will go into the question and answer session after this, but if anybody wants our contact information, if you scan the QR code, it will have all the information that you will use to contact. And again, like every webinar that we do, we will be posting it on our social media, on YouTube, etc. And we will be sending, that information as well. So with that, I think what we will do is we're going to start our question and answer session. We actually have quite a few questions. Phil, what I'll do and what we've done in the past is I'll read the questions. If it's pertaining to me, I shall answer it. If it's pertaining to you, then you can take it. So first question, do you like syndication and buying bulk single family deal rentals? And I think that just means, and correct me if I'm wrong, but if I want to buy multiple properties, can I get a better price? That's where I'm thinking it's going anyway.
Yes, the answer to that question is generally you can, depending on the number of properties that you would be looking to negotiate to purchase. But there is no doubt that for multiple purchases, we are able to negotiate a slightly better price. Of course, that would be in concert with the fact that you're going to also receive a $6,000 discount.
Perfect. Okay, we have a next question. When will the properties be completed?
At the current production rate, and in fact, I was there only last week. At this point in time, properties will be finished and ready to close middle of August. So we're very happy with that. But construction continues we're into phase 3 now, but they haven't commenced. But the ones we're talking about this evening will all be available to close middle of August.
Okay, perfect. So, I think what makes that fantastic is, especially when it comes to the mortgage, we can really predict what the rate will be and what the terms will be because it is so close to actually closing time. So next question, how much rent can I get for each property? And I think that was featured in the slides, but Phil, maybe if you will kind of want to touch on that and maybe what the forecast is, especially as we're seeing rental yields rising, not only just in Texas, but across the world.
Yes, well, when those slides were prepared and our analysis was done, the rate was, as I said in the slide, $1.30 per square foot. So you could simply multiply that by the number of square feet in each property. But depending on the size of the property, our rental income is going to be somewhere between $2,800 and $3,500 per month.
Perfect. Okay. As these are new properties, are there warranties on the properties? And if so, what is it?
Yep. They have Lillian Homes offer what's called a 1, 3, and 10 warranty. 1, 2, and 10 warranty. So the first year, of course, is a complete 100% warranty of the entire home. Anything that all that goes wrong in the first 12 months is repaired or replaced, depending on what the problem is. In year 2, the warranty covers electrical work, air conditioning units, electrical and plumbing throughout the house. And then the 10-year warranty is structural. That is the concrete slab or the cement slab, the framework of the property, the roof. So structural of the actual house is 10 years.
Okay, perfect. Another question. If I buy the property and I need to pay a down payment, how does that work? Do I pay an attorney or escrow agency, or do I pay the developer directly? And, maybe let me kind of start to answer this, and perhaps maybe, Phil, you can kind of expand. But for every U.S. mortgage transaction or purchase transaction, there is, in most cases, and again, Phil, correct me if I'm wrong, you are never paying directly to the mortgage company, to the property management company, or to the developer. The US is a very transparent, very precise market where everything is either done through escrow, which would be in Texas, or an attorney, which maybe would be in a state like New York, where they ensure that all of the money that is received is kept into an escrow account, which is insured and bonded to make sure that this transaction is as safe as possible. So, Phil, I don't know if you want to add anything to that, but that's kind of a standard.
Your explanation was correct. So that the down payment or deposit, depending on the property, but generally in this instance would be $20,000, and that goes into an escrow account, Robert, and that is only applied to the property at closing and is noted in the closing documents.
Perfect. Oh, this is something that we sort of discussed, but I think this might be something that we can email about this regular. It has to do with the rental guarantee, but I'm not sure we can cover it in this webinar. So moving on to the next question, what are your management fees?
The management fee on this particular community is 8%. Per month on the gross rental income received.
Okay, perfect. Next question. I'm interested in buying one of the plots. How do I proceed to start, and how do I make use of the $6,000 discount? Very, very good question.
So once you've selected the lot, once you've had a look at the lot plan that you saw in the earlier slide, you select the lot, then you would select the plan that you particularly like. And we can provide you with the ones that we focused on in this webinar tonight are a selection of, I think we showed 3. There's actually 4, 5 that you could choose. We could provide you with the plan that you like. You select the plan that you like. We then prepare the purchase agreement, which identifies, of course, all the details involved in your name, address, whether you're going to buy it in a corporate name or a personal name. That at that point, of course, Robert and his company would also become involved if it was to be a mortgage plan. And once the purchase agreement has been prepared, it's signed and executed, the escrow is paid, and construction would commence immediately.
Perfect. Okay, next question. And I actually wanted to kind of address this with you as well. The question is 5% yield. Is there any calculations available? Struggling to figure out fixed expenses and mortgage costs. Now, when you quoted a 5% yield, you were quoting a net yield after what you believe would be the general fixed expenses of the property, not a gross yield. If you were to look at a gross yield, it'd be significantly higher. The video of this presentation after, and it actually covers, if you choose to get a mortgage, what the mortgage cost would be. Now, again, the mortgage costs would really determine or be determined on how you qualify for the mortgage, but it does show and give some options. So Phil, I don't know if you want to go over the how you come up with a 5% net yield, but please feel free to expand beyond that.
Okay, so the calculation is based on the gross rental income per month less the fixed expenses. Now, the fixed expenses that we use in this particular case is the HOA or Homeowners Association cost, which is quite small. Your insurance premium, and that would depend again on the particular plan that you choose, but that's going to be somewhere between $800 and $1,000 per year. The management fee at 8%, and then your property taxes. Now, the property taxes in this particular area are approximately 1.5% of the value. And we've actually taken that calculation based on the total purchase price of the house. Of course, naturally, if you're using mortgage finance, the numbers are slightly higher because you're only then taking that calculation based on the actual cash that you're using, not the total amount that you're borrowing on the home.
And I think one thing that we did not cover in this presentation was the taxes. So if you were to look at getting a mortgage, Yeah, you obviously want to consult with your tax advisor, but you can write off the interest on mortgage off of your rental income, taxable income. So even though you're getting a mortgage and you may see it as I guess as a more expensive monthly cost, if you can look at zeroing out your tax liability, having a mortgage really should not affect the overall rental yield. And again, maybe you can correct me if I'm wrong on this, Phil, but I think in general, you're going to be able to get much more leverage and be able to take a lot more discounts off of the rental income by applying a mortgage.
Absolutely correct. Absolutely correct. Because all you're using now is the actual cash that you're putting onto the property as part of the mortgage program. And of course, as you said, Robert, the interest is tax deductible. Even if you decided to go visit your property, so if you live in Singapore or Hong Kong or wherever you may be, and you decide to go to the United States to visit your property, you may go there on a holiday, but you're going to go visit the property. The costs of traveling there and back and your accommodation are tax deductible. Depreciation, of course, we set up the depreciation schedule at the beginning, is also taken off the value of the property. So the bottom line is that over time, the amount of tax liability in your property will be zero for at least the first 4 to 5 years.
I think it's, we bring this up a lot because there is a very big misconception of U.S. taxes, especially when it comes to rental properties. And, it's quite unique. We're a global company with people all over the world. Myself, I'm personally based in Singapore, where you have issues like stamp duties, cooling measures, limited loan to values, etc. These do not exist in the US. It's truly a free market. As the property increases or decreases in value, that's what you're going to be able to take advantage of. And also, most, if not all, of the tax advantages that a US citizen gets, a foreign national also takes advantage of that. So next question, and this seems to be for me. Presentations were at 50% down payment. Is there a financial view available at 25%? Keen to understand the mortgage payments. Absolutely. If you're a foreign national, we can get up to 75% financing on a purchase. If you're a US expat, we can get up to 80%. We're happy to work out the numbers if that's something that you want to look at. The reason why we did it at 50% is, and this has sort of been based on how these properties have worked out, is that we've seen people buy multiple properties if they were going to come in and pay cash and they found out that these mortgage options were available. And that's sort of why we calculated at 50% loan to value, but we can get up to 75, and we're happy to go over that with you if you contact us after the webinar. Next question is, I missed the first 10 minutes. Can the presentation be shared by email? Absolutely. Everybody that has signed up for the webinar and maybe wasn't able to attend, or everybody that has been attending the seminar, thank you for that, by the way, they will receive an email with not only a recording of the webinar, but a breakdown of the questions and answers that we've addressed today. So you'll have a better idea of not only what to watch or what to see, but if you want to take time and read it, we have that as well. And please feel free to share it with friends and family. Phil, this would be for you. What is the average cash on cash return?
Well, the cash number is difficult to calculate depending on the plan and the gross rent that's being paid. But as I said earlier, the 5% net is the average that we're using as the net cash on cash return.
Okay, perfect. Next question is, I am not a US citizen. Do I need to get pre-approved before, and how long that will take? Absolutely excellent question. Getting pre-approved for a loan, if you intend to use leverage, is absolutely vital, because you do not want to go in and put an offer in on a property or make a commitment to purchase without knowing what the loan terms are, if you're approved for the loan, and does this loan make sense for what you need. So once you supply all of the documents, and again, I think you'll find it even easier than applying for a loan in your home country, we can normally issue a pre-approval, meaning the loan has gone through underwriting and it's been issued, just waiting on the property. within 72 hours. Once you have that letter in hand, you can give Phil a ring and you can put an offer in on a property. Next question. My wife and I are retired. Can we still qualify for a mortgage? Yeah, this is actually perfect. So if you looked at our AM Investor Plus loan, our AM Investor Plus loan is absolute common sense underwriting. It is underwritten like a commercial mortgage. Like if you were to buy a building, it's going to go on the cash flow. That is how we look at rental properties. Everybody that is buying a property, at least in the majority anyway, is buying the property for an investment. So why should it not be treated that way? This is how we feel and this is how we underwrite it. So although you may be retired, if the rental income can cover the mortgage payment, you will qualify. So you do not need to provide your personal income documents. All we're going to do is qualify the loan off of the projected rental income of the property. Next question. What do I need in order to qualify for mortgage financing as a non-US resident? So again, my question, it's a quite simple and straightforward. Now it really depends on which program you qualify for. Assuming you're a foreign national, you can qualify using the income letter, as we discussed before. We would like if you had credit in your home country. So regardless of where you're at, if you're where Phil is in Australia, you provide your Australian credit report in lieu of your US credit report. Works exactly the same. We need to see 2 months of bank statements, and those bank statements just need to see that you have the deposit. And those 2 months is more to cover the AML requirements by the US. And your passport, and that any money that you would be used as a down payment on the property. And that is pretty much it, along with the loan application, of course. Very straightforward, very simple. And that's why we can normally issue an approval in a very quick time, normally within 72 hours, but often much quicker than that. Question, does your property qualify for EB-5 or E2 visa? I'll kind of take a stab at it, and then Phil, maybe you can kind of jump in. But you know, the EB-5 investment visa, we get this question quite often. EB-5 investment visa, unfortunately, you know, unlike like countries like Portugal, where you can buy a property in order to get, you know, a golden visa or whatever it may be, the US does not have that. If you do an EB-5, it's through an EB-5 program. Buying US property is, you know, absolutely fantastic, especially for diversification. But unfortunately, it does not allow or does not qualify you for any of the residency visas. Phil, I don't know if you have anything you want to add on that, but that's it's a general.
No,
get a lot.
That's exactly right, Robert.
Okay. Next question. Can a foreign LLC, I'm assuming that means get a mortgage? The US allows, or at least the lenders that we use, allow you to hold title of the property in an entity. Normally, that entity would be a US corporation, an LLC, a C Corp, S Corp, whatever your tax advisor may suggest. That is no problem with holding the title. And there's a variety of reasons why people choose to hold their title or the title of the property in an entity. However, because these are recourse loans, and I realize the loan to values are 75%, so the likelihood of of an issue with a recourse or non-recourse coming up. But because these are recourse loans, we need somebody to be the responsible borrowing party, basically the UBO. There needs to be somebody that qualifies and applies for the loan, and that would be the person obtaining a loan. But again, title can be held by an entity. If you want to use a foreign blocker, we can certainly discuss that over a call. It does make it much more complicated and difficult, and it's not entirely impossible. It just makes it a little bit more challenging. Last question. Does OSPlan provide liability insurance in case of a dispute with tenant?
Part of your insurance policy that we take on the property on your behalf covers you against liability for any injury that may occur with either the tenant or tenants' friends or people that might step foot on the property. But liability in terms of litigation or a debate that's purely over financial matters, for example, no, it doesn't. But the liability does cover you, the owner, for any liability that may occur as a result of injury.
And I think that is pretty standard globally.
It is, Robert. That is very standard.
Yeah, there is, I mean, liability insurance if somebody gets injured or whatever it may be on the property. But if for some reason there's a dispute between you and the tenant, it's something, which is handled often by the property management company.
I was just about to say that Osprey Management, as I said earlier in the presentation, is a turnkey, seamless organisation. So all of that is handled on behalf of you. So if there is a dispute, we will negotiate on your behalf with the tenant. If it gets to the point where the tenant is still being difficult, then we would recommend that our attorney use some leverage to resolve the dispute, or indeed have to evict the tenant. But that doesn't happen very often. As far as we're concerned, it is a balancing act. We're trying to balance between maintaining a good relationship with the tenant, but also our main focus is the owner. So we act very, very focused. We're very focused on ensuring that issues like that are handled quickly, efficiently, and the end result is that the owner is the winner, if you like.
We have one last question that just came in, and then we'll wrap this up. Again, we will be sending out a recording of within the next few days, so everybody will be able to kind of catch up on what happened in case you missed a few minutes. The question is, for best credit, what rate of interest is going? So, obviously, not just in the US, this is a global issue. Rates have increased from the fantastic COVID rates that we had. However, they are still historically low. The only reason they seem high is that, we had sub 3% rates, which, was never available ever in the US. So rates right now, if you're a foreign national, you're looking at, say, in the 7s. But again, remember, the US is one of the few places that allows you to get a 30-year amortization regardless of age, and where you can fix interest-only loan programs. So you can really still take advantage of the yield and be able to get a lot of fantastic loan programs that may not be available in other markets if you're choosing to invest. And one thing that we always say is, you date the rate and you marry the property, meaning that you're not always going to get this $6,000 discount on a property. So you can't time the market. You can time what is a good purchase and what is not a good purchase. And at some point, rates may come down again. If they do go down, then you can always refinance. So with that said, Phil, thank you very much for attending. Super interesting. We're super excited to be working with Osplan and Lillian Homes to be able to bring our clients these fantastic affordable properties that have, in my opinion, great yields and huge potential. So, Phil, I don't know if you have any closing statements, but please.
Well, thank you very much for allowing me to be part of this webinar, Robert. I do hope the information we were able to provide this evening is of interest. This is a wonderful opportunity. This community of Crowley is so good. As I said, I was there 2 weeks ago. It's absolutely a delightful place to live. The city of Crowley is a delightful place to be. The school is across the road. The homes are gorgeous. We have absolutely no doubt that these properties, and as I said, we've been doing this now for many years, over 14 years. So we know the marketplace very well in the state of Texas. And this is a great opportunity, particularly considering you can also receive a $6,000 discount.
Awesome. Thank you, Phil, for joining. And thank you, everybody that stayed on for the entire webinar, people that came in and weren't able to stay. We really appreciate your time. And any questions that you have, feel free to reach out. Have a fantastic weekend, and we'll see you in 2 weeks for our next webinar. Good night.